When you're working in Asia, you're working across approximately 17 countries. You'll have 17 different countries who operate in 17 different ways. And corporate registries is no different in that regard.
Oonagh, welcome to the show. Great to have you on board.
Thank you for having me, Steve. It's a pleasure.
Well, so far on this show, we've covered a number of registries in what you might call the Anglosphere. But this is our first foray into a registry from Asia, which I'm quite excited about. So we're going to be talking about Singapore. And you're someone who's worked extensively in and around Singapore. So maybe start by telling us a little bit about your experiences there and what your understanding is of the AML framework.
Oh, absolutely. So firstly, thank you so much for having me join you today, Steve. So I've worked out in Asia for approximately 12 years. So 6 years Singapore, 6 years Hong Kong. And prior to that, I was in London for 7 years. So I really did get a good comparative analysis of the different regimes for corporate registries. And one of the things that really is different about Asia in its totality is when you're working in Asia, you're working across approximately 17 countries. And those 17 countries, is one individual put it was Paul Jeftovich, said you may as well be working in 17 different worlds because each one of them is so specific to itself. It's not like Europe or even the US where we have standardized practices. And a sense of, understanding of how the process works. But within APAC in particular, you'll have 17 different countries who operate in 17 different ways. And corporate registries is no different in that regard. A great example is Indonesia. Most corporate registries are run at a country level, whereas in fact in Indonesia, they're run at state level. So what that means is when you need to access documents for a company, for example, you have a new business client who's been onboarded and you need documents from the registry, you need to go to the specific state from within which that company was actually registered, which is obviously different from the likes of the UK or even Singapore or Hong Kong where it is centralized. So Asia in itself, APAC in particular, is very, very nuanced and specific. But the good news is Singapore is by far one of the most simplest, straightforward. When I say simplest, it's because it's just common sense. Simplest, straightforward registries to actually use globally. It is so practical. And a lot of work is done in Singapore to ensure not just the credibility of the register itself, but also the accuracy. And that goes obviously into the likes of making sure that entities that are registered are verifiable entities. And each one of those entities will be verified itself. And we've seen, obviously, the UK is a good example where you'll have multiple businesses being registered to one address. And when you look into it, you have to question what actually is this? Because, it's a house belonging to an 80-year-old woman. So Singapore, you don't see that. It's a very, very different regime. And in Singapore, the whole corporate registry is actually overseen by ACRA, which is the Accounting and Corporate Regulatory Authority. And they oversee business entities, public accountants, and corporate service providers. One of the beautiful things about Singapore is that this is all, ACRA actually offers this all online. It's you can access everything. It's called BizFile, and you can access everything through BizFile, which is an online portal. That portal actually has been in existence, goodness, as far as I can remember. So I've been using it since 2013, 2014. So, again, compared to other countries, technology has been at the forefront of this. And what is amazing about onshore company registrations, i.e. for corporate entities that are registered in Singapore, is all individuals in Singapore actually will have a national identity number. So you will actually have your national identity number, which will link into your tax portal, which in fact has everything. It's called SingPass. It has everything. It has your verified proof of address. It has your last tax return. It has basically every single thing that you're associated, your employer, every detail is in there. So whenever you want to open a business in Singapore, ACRA will actually access SingPass to get this information. So you can actually open a company pretty much instantaneously onshore if you actually already have SingPass access. And again, what does that mean? Well, again, verifiability. It means that whenever you're opening these companies, the government is actually assured that the information on you is accurate and verifiable through their existing government portals. So in effect, it probably is one of the best, if not the best, corporate registries, in my opinion, around the globe, just because of the fact that every single piece of information that goes through it is verified. I hope I'm not going down a rabbit hole here.
Absolutely not. I mean, that has been one of the key topics that we've been talking about in this series, really, is the extent to which verification takes place. So I definitely want to come back to that point. I've been looking forward to this conversation for that very reason, because Singapore has a good reputation when it comes to triaging, verifying the data that's put in there. Go back to the first point you said, though, actually, I would concur from speaking to colleagues and friends that, almost has that reputation, like lots of things in Singapore, where it just works. It just has what you need. Everything runs on time, everything runs well. To translate that into some of the requirements of some of our customers that I speak to and others in the sector, you can go onto the website. This is always one of our first checkpoints. You can get a company profile. That will tell you who the directors are of that company. It will tell you who the shareholders are of that company as well. Yep. And even have identification information around those shareholders. So, yeah, I think for our 3 tests, as we've started to call it, it definitely passes that first one, that in terms of usability for anyone that is looking to gather information about a company for a particular reason, that there's a lot you can do with it.
Yeah, usability, I would also go as far as say transparency. If you need to access or purchase information about existing companies, you can actually provide you with various register products. So you can access the register of business, the company documents, and the register of members as well. So, it's just transparent. And that's all we're asking for, especially in the line of work that we're doing. 101, our job is from a compliance perspective, is we need to verify the corporate entities. And as I'm sure you know as well as I do, there are many challenges in different jurisdictions around the world doing that, but Singapore is one of those ones where it is just seamless in respect of transparency. You have to remember that this overview, this ACRA transparency, accountability, verification, it's also supplemented by an incredibly strong and robust AML framework. Under the MAS, the Monetary Authority of Singapore, Singapore has implemented one of the strongest and most robust AML frameworks, in my opinion, globally. I was actually there. I had the luxury of being in Singapore back in 2013, 2014, whenever they actually decided to basically overhaul 626, which is the core. So it's 1016 for like kind of merchant banks, 626 for, your standard financial institutions. And that is your AML framework. And it starts with obviously the regulatory framework, and then it goes down into guidance and supporting documents. And it is so clear and it is so concise. And yes, of course, in the early stages, there was a little bit of norming and forming as different interpretations. Areas such as maybe trade finance and correspondent banking hadn't had the attention that they deserved at the early stage. And again, one size doesn't fit all. But what then subsequently happened was the regulator sat down with the industry, with experts in the industry, to go through all of those various areas. So it's got a very, very, very strong framework. And even earlier, the end of last year in October, Singapore published its national anti-money laundering strategy, outlining again its strategic approach to money laundering, which really is built around 3 pillars: prevention, detection, enforcement. And these really are founded on the foundational elements of a whole society coordination, which is something maybe we can come back to and talk to, but it's not just about a robust legal and regulatory framework and international cooperation, but also enforcement, where the police are working alongside the regulator, who are working alongside the industry practitioners to really make this a holistic provision of services that we know that we're going to be able to identify quickly and detect and prevent illicit activity happening in Singapore, and therefore maintaining the integrity of the financial system. So I have to say, again, I sound like I should start an MAS AML campaign, but it really has assessed and managed money laundering risks in a very, very practical way through predominantly a risk-based approach. Yes, there are some rule-based aspects in terms of KYC verification information, but mostly it is risk-based. And it really does pay attention to customers and products and services. And this is something that really sets it aside. As I said, in my opinion, it is by far one of the strongest AML regimes globally.
Well, just going back to those three pillars you talked about, the really interesting one for me is prevent, because you'll hear governments all over the world talk about preventing crime and being tough on the causes of crime. That's especially true for financial crime. And, we perhaps don't see enough of that, really, governments thinking about what they can do to prevent it and how they can, tie up those loose ends and those loopholes. And, the Register is a really good example of that. And again, something we've talked continually about on this series is the ways that criminals and fraudsters are exploiting company creation and holding directorships to facilitate financial crime. So, it is really interesting to see that called out as a specific priority in the money laundering strategy. And as far as the role the Registry can play, well, actually, even prior to that strategy being published, ACRA had set up a specialist unit to harness data and technology to detect anomalous activities when companies are set up. Now, that's happening, and we've talked about other registers where that's happening globally, but the really interesting element for me is the use of technology.
Absolutely.
So actually a focus on the preventing of financial crime, but also still on that user and that customer experience of the register as well.
Well, I have to say, we hone in the word protect. The three pillars are protect, prevent, detect, enforce. But if you go into, well, what does prevention mean? It means implementation of measures to deter illicit funds entering the financial system in Singapore. So, and I'll be honest, we cannot prevent illicit activity, but we can deter them. So the prevention word is it's a bit of an extremity in terms of using that, and it goes to point. We want to prevent it, but the ultimate answer is we can only deter it because of the way in which financial crimes are evolving. Their ability to be prevented, we're always going to be two steps behind. That being said, with the adoption of new technology that's coming through and looking at ways in which we can potentially use machine learning to basically look at behaviors and understand what potentially could be the next evolution of financial crime or illicit activity, that's maybe going to be a game changer. But at this moment in time, it is about deterrence. And that's where it comes back to the really important coordination between the police force, the regulator, and of course, the industry parties. As I mentioned, Hong Kong has a phenomenal reputation as a financial hub globally. It is one of the key financial centers. But only about 2 years ago, US lawmakers basically came out to say that they had massive concerns about Hong Kong's role in financial crime, in that they felt the city was becoming a hub for activities such as money laundering and sanctions evasion. Now, we could argue that was maybe more of a geopolitical play in respect of sanction regimes. There was a lot of challenges between the US sanction regimes and then obviously China and entities that were dual, that were sitting in Hong Kong but had operations in China and the US. That was a massive issue where a lot of technical advice had to be obtained as to, where am I in respect of sanctions compliance? How do I need to ring fence this business? And Hong Kong itself maintains that it has an incredibly robust AML and CTF framework. And that being said, I have seen that in practice. I have seen the enforcement action coming through. I have seen disciplinary actions coming through. Even just last year in November, the HKMA fined Fubon Bank for violations of AML and CFT ordinances. China, the CITIC Bank was also fined 4 million penalty back in December of last year. But that being said, we are seeing, unfortunately, a lot of illicit activity in recent investment scams and honey trap scams, romance scams that are coming through. And what happens here is people are being contacted for these investment scams, and they're being asked to send money to both individuals and corporate entities. And in many instances, and I have seen this, these entities are existing in Hong Kong. What we also need to be mindful of is when you look at the incorporation of these companies, most of them have been incorporated for less than 12 months. And that should be basically a warning bell to anybody that is being asked to send money. But that being said, your person on the street doesn't necessarily have the capabilities that you or I would have based on our previous compliance experience to look into registries to understand how long these companies have been incorporated. So there is a problem of illicit activity happening through corporate entities and individual accounts in Singapore, and in Hong Kong, and we need a much more coordinated approach. And that is where was quite interesting is if we then bring that over to Singapore. Singapore has actually implemented technology to monitor, and we talked about incorporation, and incorporation is one step. In all honesty, if you look at any type of incorporation of a company or opening of an account in a bank, what I tell you on paper as to who I am is meaningless until I start operating that account, because then you will see who I am. And what we're actually seeing in Singapore is they're adopting AI technology to compare the incorporation details of the corporate entity, linking that up to the financial activity within their corporate accounts to see whether it all tallies up. Like, is the company, are there any outliers which are surprising us? Are there any kind of entities that they're involved in that we wouldn't have expected in terms of even those entities' activities? So, for example, if we see a travel agent that actually is receiving money or sending money to a haulage company, guess what? Red flag here is human trafficking. So, and again, the same thing goes for businesses, for restaurants that could actually be bringing in individuals under modern day slavery to work into their establishment. So that is what Singapore is doing with its corporate registry, linking it up to the financial information available within the various accounts of the financial institutions, and then basically saying, is this all making sense? And I am yet to see that anywhere else in the world happening. And yes, a lot of this is at its infancy in Singapore. I know that when they say things are in their infancy, they have been tried and tested for a while before it's been rolled out. So that is what is a game changer in protecting Singapore. And that's where you can really feel that when you open an account for a Singaporean-based company, you know that you have that transparency. You know that there is that accountability with ACRA, that they have verified the account. And it's not just a one-off verification. This is an ongoing monitoring of the activity of those corporate entities. Again, I've not seen that anywhere else in the world, but I'm happy to stand corrected.
Well, the transparency front, what's interesting to me as well is lots of what you've just said. Actually, there are ACRA press releases, news articles about online. They're very, very keen to talk about what they're doing and the measures they're taking to improve prevention and enforcement. And one of those in particular, if we just give a case study of one of those exploits that we referred to there. So one of the interesting things I saw in Singapore is the use of corporate service providers, and actually a large amount of incorporations are done through these service providers. And actually, there is some indication, or there has been in the past, that there was some exploitation there of how these providers were working and the use of nominee directorships in particular. I think one article I saw flagged that the highest number of directorships held by one person was about 600 in Singapore, which is something we've seen in the UK when we did our episode on there as well. But actually, there have been results on that. And, the first 6 months of 2024, after that unit was set up, a regulator acted against 14 registered filing agents who are providing corporate services, cracking down on misuse of those services and errant CSPs. So, yeah, it's interesting to see, and great in many respects. This should be the norm: problems being identified, solutions being devised, results happening relatively quickly afterwards as well.
Well, definitely. And, and on that note, we can talk to where Singapore has been proactively enhancing its corporate registry framework to really bolster its AML measures and reduce anonymity within the corporate structures. And first and foremost, and we've spoken to this before, Steve, they've enhanced the regulation of the corporate service providers, the CSPs. And back in July 2024, they enacted the Corporate Services Bill, which requires all entities offering corporate services. So going back to your point there and about, one person having up to 600 registrations as a company secretary, any entity offering corporate services has to register with ACRA in Singapore. This mandate also extends to firms overseas who aren't directly transacting with ACRA. And they actually have quite stringent penalties here for non-compliance, which reach up to like 100,000 Sing dollars. So that is very significant. I think in UK terms, that would be around, 70,000 pounds for any non-registration. They've also increased transparency and beneficial ownership. And this is a great example with Hong Kong. You can actually see, so we saw with the US under the Biden administration, a real drive to increase the transparency of beneficial ownership within the corporate registries. And that was a fantastic move forward. However, in Hong Kong, under the kind of the rollout of the new security laws back at the end of 2019, what happened there was the ability to see beneficial ownership within corporate entities was removed. So we took a step backwards in respect of Hong Kong. But for Singapore, even as you know, last year in July, they amended the Companies Act to expand the definition of nominee shareholders and introduced requirements for companies to lodge information about nominee shareholders as well. This is really fantastic because it means that these initiatives really allow us to trace beneficial ownership, and that aligns very, very closely with FATF. And one of the things that I would say here is what we're seeing more and more, especially in respect of complex networks, is it is not the first or second party that's going to be involved in the illicit activity. We're really seeing around 3 degrees of separation before we actually are touching on the entity within the corporate structure that's involved in illicit activity. So being able to trace those nominee shareholders gives us much more ability to basically widen our web in terms of our searches within the corporate entities. And then last but not least, and we've talked to this about the integration of artificial intelligence and ML efforts, this has been transformative. Singapore actually rolled out Cosmic last year in April, which is the, let's say, collaborative sharing of money laundering, terrorist financing information and cases. I would have loved to have known who came up with that. And basically what that does is it facilitates information sharing between financial institutions to detect and hopefully prevent illicit activities. And in addition to this, AI-driven technologies are being employed, as I've mentioned earlier, to analyze vast data sets, identifying suspicious patterns that might indicate money laundering activities. And as I said earlier, that goes back to even comparing the purpose of the business as registered with ACRA to the activity on the account, the services that they're expected, entities you would expect them to be involved in, and outliers. The example I gave earlier was the travel agency and the haulage company, which could be an indication of human trafficking. So again, Singapore is incredibly, incredibly committed to enhancing corporate transparency and utilizing advanced technologies really to combat this effectively. And we couldn't ask for more, if I'm honest. They are, again, in my opinion, at the forefront here.
Well, really powerful to hear it from a practitioner such as yourself as well, because, you know, as you said earlier, when you see a Singapore company come up that you've got to do business with, or that needs to go through some kind of AML check or verification, you know, you're happy to see it's a Singaporean entity. That kind of says it all, really, doesn't it, in terms of the ability of the register and the AML framework to support the work that the analysts are actually doing, the people that have to do this work day to day within businesses.
Absolutely. And, you know, it goes back to it is the onus shouldn't just be on the banks here. And that's one thing that we as industry practitioners have said over and over again. It's, you know, we are there as part of the bigger picture to help detect and hopefully prevent illicit activities through the financial system. But we are not on our own. It needs to be a coordinated, consolidated approach. And that is what's happening in Singapore. There is a real consolidation amongst various practitioners, both public and private, to make a credible change. And we need to see that much more in other jurisdictions, that link up. And I mean on an ongoing information basis. We've talked about it many times about, you know, we're talking about SARS, you know, we're submitting SARS, but we don't see anything back. What does that mean in respect of the account? But on the other hand, what we also need to understand is what are the changing typologies? What are the police seeing? What are the authorities seeing? What are international cooperation and information flows and sharing telling us? And we need those information flows to move in all directions, not just up and down, but vertically, diagonally, you name it. So Singapore is really doing that. And they've always had a linked up, coordinated approach, which unfortunately can't be said for other jurisdictions. But maybe the reason for it is that Singapore, from its outset, has designed itself on being the most practical. It's a very, very practical country. Everything has a process. But the truth in Singapore is, everything has a process for a reason. And you can be assured if you go somewhere and they say this will take 2 weeks, it will take 2 weeks, not a second, shorter, not a second longer. And other jurisdictions can't speak to that. So they do have processes. And I suppose the country is much younger in that it's been able to look at other jurisdictions, look at what's being done well, what's not being done well, and really build upon that. And again, continuous improvement is at the forefront of this. And even, as I said, last year, there was a significant number of developments, as it mentioned as well, their national, anti-money laundering strategy, which was issued on the 30th November, 2024. We have that in place. We've talked about that earlier. One of the things that we also saw last year, which I know, Steve, you mentioned earlier, was the BizFile portal, which is where you can access all of the information from ACRA in terms of the company information. It then actually, in December last year, updated with all of the individuals who are on the registry, all of their national registration identity card numbers, so that's NRIC numbers. And that caused a massive ripple effect in Singapore, in that there was serious concerns from a public perspective that this actually impacted privacy and potential misuse of personal data. It was seen that those numbers are specific to individuals. They can identify an individual through government systems, therefore it's personal data. That obviously was then, the system was temporarily disabled. And then subsequently it was reinstated without displaying these numbers. Now, what I said to you earlier, which I actually found very strange, I now live in Portugal. And when I moved to Portugal, you have your NIF, which is your national identity number. And when I moved here to Portugal, you go to the supermarket, and the supermarket, the checkout will say to you, would you like to give your NIF? And I was like thinking, well, why would I be handing over my tax number at a register? And what actually happens here in Portugal is that people freely just hand out their NIF numbers when they're paying for any goods in the supermarket, anywhere you go. And for me, I was quite shocked because as a compliance professional, a data protection specialist, I was like, hey, wait a second, guys, this number is your personal identifier. So it just goes to show you that when, in Singapore, they updated ACRA or BizFile portal with the NRICs to be available to the public, there was such an outcry. But if you go to other countries who really have stringent GDPR requirements in place, people are willingly giving out their national, tax and identification numbers. So you can't win, But I do believe going forward that this access to the NRIC numbers, you can actually get that in Singapore now if you purchase the file, but it's not available to all public at large. But there will become a point in the future where this will be available publicly.
That seems like a big leap forward into terms of transparency then, as we've talked about. And, possibly, I'm sure some would argue, at the expense of personal privacy. So in fact, there were examples of fraudsters and scammers taking advantage of the NRIC numbers being published to pose as government officials, to the slightly more vulnerable in the public. Let's contrast that probably with the final topic we always like to discuss, which is ultimate beneficial ownership data and where a country sits on that continuum between personal privacy and transparency. So for balance, as you said, there is very accurate and well-maintained beneficial ownership information in there. So shareholders, nominee shareholders, that can be used to trace the ownership of companies. But if they're going cross-border, you've then got the challenge of having to find who owns a company, let's say, for example, based in the Cayman Islands, where ownership data is very hard to come by. So, what in your mind is the reason that amongst this landscape of transparency, we don't have a public UBO register? And from what I can tell, there's been signal no plans to introduce one either.
Well, to be honest, I think that the information, if you look at the information that you need in respect of the corporate entities in Singapore, it's all available there. Do we need to maintain a standalone UBO registry? It goes back to what would be the added value in that, given the fact that the information is already available within the ACRA files. There's this whole discussion around companies having these global LEIs and then having a global UBO register. And the question is, like, once you then sign up for that global LEI, you will then become part of a global registry. You're still going to have to pay for access. So this is where I struggle in trying to understand where that issue on transparency is, because as you said, the information, and as I mentioned, the information is all available. The only difference is the UBO registry is available to law enforcement, but if you want to see who the UBO is in a company, you can actually obtain that through the ACRA file access. A few years back, I actually had the privilege of working on a paper with Bank for International Settlements, together with Benedict Nolans and her team, and we were really examining the challenge of UBO access without LEIs, and whether or not it was practical to expect banks to implement KYB frameworks for corporate entities when in fact the information was so, how can I put this, it differed globally so much in respect of what information was available, and then its accuracy and its verification. And the ultimate answer was, of course, that we need global LEIs, but then the question was, who will oversee this and who will maintain that register? And in some countries, people just weren't willing to pay for it. India was a very good example where, to incorporate a company was relatively cheap, but the additional cost of the LEI was not seen as something that would add value. So then the whole discussion was, should you only obtain a global LEI if you're going to transact in business outside of your country? So if you're staying onshore, is there really a need? But if you want to conduct business overseas, you automatically should obtain one. And I think that's the direction that we're really going at the moment. Ultimately, we would like everybody to have global LEIs, because that would then mean that we could actually access all registries of UBO information and, basically put that diagram together of all of the different parties that are involved in different companies, onshore, offshore, etc. We'll get there one day, possibly. But the LEI discussion still is an issue because of the cost involved, and governments aren't willing to pay for it. Therefore, it goes back onto the end user. So there's a lot of issues need to be ironed out there. And Alexander Ketch is by far your person to speak to on that.
Yeah, well, they're doing some great work, and others too, we should say. Some of whom we've mentioned on this series, open ownership, for example, we talked about in our last episode. But yeah, I would totally agree that there is, in an environment where governmental collaboration is hard to come by, unfortunately, in 2025, we need NGOs, we need the private sector to be innovating and thinking about the solutions to these problems ultimately.
Yeah. And we've always had this preconceived idea of, different entities or different products that are being used for illicit activity. And that is changing fundamentally as financial crime typologies are changing in respect of, we're seeing a complete intersection of cyber, digital, fraud, and money laundering all happening simultaneously. But yet within banks and organizations, those departments remain siloed, and they're not joined up together in respect of their internal data. So there's a massive overhaul required from an industry perspective to really start looking at financial crime typologies. And this will then go back to, are our existing KYB, like know your business processes, adequate? And can we really, is KYC for individuals and KYB for corporate entities, is it really a value add? And I made a comment last year at an industry event where I said, I really believe that KYC will be obsolete within 5 years. And one of the reasons for that was obviously to do with digital identity. But the other reason for it is, apart from telling me what you think I need to know about you, KYC offers me absolutely no insights. I'm looking at information based on what you have told me. And if you're a good illicit actor, you're going to know how to work this system. You're going to open a low risk account, maximum medium risk. If you opened a high risk account, you'd be an idiot because you're trying to, you're trying to conduct illicit activity through an account that's going to have the maximum level of scrutiny. So what is KYC in effect doing for us? And then kind of like taking a step back, how do we know how the account is actually being operated within its usage? It speaks for itself. But yet we have invested so much in KYC. But I'll be honest, I think that we've invested very little in transaction monitoring. And why do I say that? Don't get me wrong. Transaction monitoring systems are costly. They are a regulatory requirement to have them. But the rules and scenario based, we're basically bucketing people into different groups and expecting to suddenly our systems to identify an illicit activity. Those systems, based on rules and scenarios, are somewhere between 2 to 8% accurate. And that's a known industry stat. AI is the only way we're going to be able to find a solution. And by using behavioral analytics, by using machine learning to understand how the account is being used and looking for the basically interconnected activity with the account. HSBC was a great example. They implemented Google AI. And when they implemented it, they didn't tell the Google AI team what they wanted. They just said, like, this is what we need. They were able to identify complex networks within their book that they couldn't have ever seen with the human eye because the systems that we have just weren't able to support that. So with the implementation of AI, we are going to see massive changes. But going back to my point earlier about about these siloed operations, we have so much data within our organizations on the same client. The credit team will have their own information. The business team will have their own information. The KYC operations team, they will have their own operation. But never shall the three speak, all operating mostly in different systems, all kind of maintaining their own files. Those is 3 singular data points on clients, each of which probably has somewhere between 800 to 1,200 data points available. But what are we doing with it? So organizations we really need a game change in terms of how we are working with corporate entities. And don't get me wrong, corporate registrations and corporate registries play a massive part in that. Can we verify who they are based on this information? But that is only the starting point. What we're looking to then see is the entity conducting activity aligned to the expectations of their incorporation? And then that's really the game changer that we need to see in the industry. I'm going off on a tangent there.
No, I was going to say, I feel like it's been a bumper conversation because we've covered a bit of Hong Kong, we've even covered a bit of Portugal as well. So almost a 3-in-1 for our listeners. I want to thank you for your time and your expertise. And it sounds like Singapore's a good place to be in terms of the data that's available, how it can be accessed. So we'll see it in our remaining episodes if any registries can live up. So thank you.
Brilliant. It's my absolute pleasure. Thank you so much for having me, Steve.